Hello everyone, good evening and welcome to today's video. I wanted to do a little bit of a clarification before we actually jump onto it, and it's actually two things. First of all, my voice is shit. Right now I had to record a 1 hour approximately video for the private community today, and this video in the middle, around the middle, I start just voice cracking all over the place. So I just wanted to mention that. And on the other side, every single trade that I show here is just to showcase the 5 steps, showcase the way that I trade, showcase how you could have profited this week from the way that I trade personally, right? Again, inspired by ICT's concepts. So without further ado, I think just enjoy the video. Hello everyone and welcome to the week resume on Eurodollar through both London and the New York session based on the way that I trade. Right, for the week of November 7th all the way up to 11th. We're going to be looking at multiple opportunities. All of these are arrows of what I believe were opportunities that showed up based on the 5 steps that I used to take opportunities. But I might be completely wrong about them because there are some that I don't remember. There are some that I maybe didn't take. I just don't remember. I'd probably remember when we are analyzing through them. So let's just jump straight onto Monday. Let's see what Monday gave us, if anything. And okay, so London session, move lower. What did it do? Look for sales liquidity, filling in that little bit of an inefficiency all the way to the left. Let me put this like that and this. Filling in that little bit of an inefficiency, aggressive move higher. Out of that, I would have preferred price hitting the 50%, and I think this was the case that it actually didn't do that. No, it misses it by a little bit, which was a little bit of a shame, but nothing for us to do about it. And as you can see, we have move lower that takes sales liquidity, aggressive move higher. And on the 5 minute, this is what I would have considered my 5 steps, or well, at this point, step 1 and 2. This tiny bit of a fair value gap, which is not ideal also, that is as tiny as it is. We're talking about maybe a pip or two. And also price doesn't actually come back to it. Now, if we were to go to the 15 minutes, we have the exact same run on liquidity, aggressive move higher with the market shift above this high, which generates this 15 minute fair value gap. That price comes back to mitigate, being that step number 3. And we have the first mitigation, right? I don't like trading this, not gonna get much into details, but this is quite an aggressive move lower. I don't like trading, I don't like buying after something like that. I was expecting the low to be taken to then find an opportunity going higher, which is what happened. But as you can see, my entry would have been on this one, being this the market shift and basically this the 2 fair value gaps. But the market pulls away quite a lot, and then the market comes back down, mitigates the entry, and actually does work out quite lovely from that area, right? And finally, a few hours later, we do get that entry. Now, I don't like keeping entries when price actually pulls away from my entry, which is the reason why I actually could not participate this on my challenge this week, which is truly a shame because it was a lovely trade. And this is actually one of the trades that made me doubt if I have to keep my entries after after prices pull away. But to be fair, I would have gone just for 4R, which means that we're getting something like that, right? Overall, love the trade. Do we have the 5 steps? We do. The only issue that we do have is this price just pulls away a lot from my point of view, so that's something that I didn't really like. On the other hand, we have this tiny run on liquidity here. Actually hide this because we don't need it anymore. We have this tiny run on liquidity here, aggressive move higher, market shift above this high, fair value gap, price trace back into it. And ideally, when the area is as big as it is in this case, I like putting the Fibonacci and try to determine if the entry that could show up in the lower time frames does have a if it is on premium, in this case in discount, right, which is ideal. But as you were able to see, basically every single entry was actually potentially inside discount. So market shift for value gap, this could have been easily a loss. I actually didn't trade any of this structure because I was mostly interested in this. Aggressive move lower, basically just price continuing lower. This move higher doesn't cause a market shift and doesn't even create a fair value gap, so nothing for me to do. Move lower, liquidity, aggressive move higher, no liquidity, no market shift, no fair value gap, nothing for me to do. Aggressive move lower, aggressive move higher, market shift, fair value gap, and that was a lovely opportunity to potentially take advantage of. And if I remember correctly, this is a trade that I took with half the risk. Because why was it? Because I had taken this loss? I think that's probable. Or did I take an early loss? I don't really remember. Thing is that I took this one with half the risk, looking for getting 2R and recovering from that loss. Basically, price starts pulling away, being 1 hour, well, less than 1 hour from target, which made me move my stop loss below this low, which was approximately below 50%, right? Which is kind of what took me out for a 0.25% loss instead of a 0.5% loss. And as you can see, price actually does get later onto the target. So it would have been a complicated bit of price action, but nothing for me to really do about it. I think I could have been even taken out for a break even later on this couple of mitigations, but who knows. Thing is that we get the 5 steps both on this entry and then on this one as well, so it's really lovely to see. And that'll be it about Monday. Also, Monday basically ranged through most of the session, except, well, after the session on 12 p.m. where we actually get that 12 midday, after we get that pretty aggressive move, but nothing that I would have actually taken advantage of in this case. So Monday, for me personally, I think it was those 2 losses. I think it was like the first mitigation and then the 0.25% loss, which for me, again, it's all right. Overall, would have preferred keeping the trade, but if it doesn't happen, then it doesn't happen, you know. So I think this one actually didn't give us an entry, but thing is that we're trading in, this is London, so this is New York, 7 to 10. We have a run on liquidity here, aggressive move lower. Also liquidity being taken from this little bit of a trend line back here, right? Lovely liquidity. Aggressive move higher, market shift about that high, or if you wanted to count it about this high, fair value gap is the exact same thing all the way down here, which is actually mitigated after the open, after 8:30, sorry, after New York kills him, not the open. And that gives us first potential opportunity. If I remember correctly, I ended up missing out on a loss, or avoiding a loss, not missing out on it, because the market shift happens here, just builds buys a liquidity. Again, aggressive price action, I don't like trading this, I've already explained this. And then we get this. Run on liquidity, market shift, and that was my entry. Or well, this was my entry. And as you can see, price actually doesn't come back down to mitigate me, and nothing for us to do. Again, do we have the 5 steps? In this case, we definitely do. We also have the 5 steps going lower, but on step 4, I think the market doesn't give us what we were looking for. So we have a... what? Oh, back here, okay. I thought I was completely lost. So run on liquidity, very insignificant and very debatable. In my opinion, it's just a weak, complicated price action, right? So it could have been easily avoided. Aggressive move lower, nice displacement, fair value gap on the 5 minute, and then the lower time frame interest, you'll see, actually gives us a fair value gap without giving us the market shift on the 1 minute. So it is... oh god, where is it? Okay, here. So run on liquidity back there. Aggressive move higher, mitigates 5 minute fair value gap. No fair value gap, no fair value gap. Fair value gap on this, but the market shift would have been at least this one, although I don't think I would have considered that one. And then ends up happening here, or just below that low, whatever it is. Thing is that this could have been an entry, just based on the fair value gap, without counting or without waiting for the market shift. But for me, that's not something that I do, so this is an opportunity that I would have missed out through this London, which is Tuesday's London, right? Lovely, lovely trade, right? As you can see, if we would have actually taken that one, it peaks at around 6R, and going below that low, that's 3.4, so probably would have gone for 4R if taken that. But again, I'm missing out on part of step 4 for me, so nothing for me to actually do on that one. This one, miss out on a break even. Sorry, not miss out on a break even. Miss out with it because I was not even triggered in. And then, well, aggressive price action. Nothing for me to do on Tuesday. Just avoided losses trying to sell. Almost took that buy. And for me, when an entry is not triggered, usually it's basically that the analysis was done correctly. Just price didn't work out as expected, and there's not much that we can really do about it. As long as the analysis direction and everything works out correctly, then I'm pretty happy with that. So we have there was a trade through. There was a trade actually in here. No, I didn't take it. Run liquidity. Thing is that this back here. Hold on, I'm a little bit mixed up. Run liquidity. 15-minute fair value gap around this area. Price mitigates it. The lower time frames gives you the 1-minute market shift and fair value gap to take the entry. So that would have been a lovely execution. But that's not something that I participated because it was through part of London that is just too early for me, being that 3:30 or something. Yeah. And this is, oh no, never mind. So I didn't actually take this once, but what I did was back test it early in the morning for the private community, and the cat caught it. But basically, I'm just showing the 5 steps here, okay? Run on liquidity. Let's look at it from the 5-minute. Run on liquidity, right? Market shift, in my opinion, happens here, right? But ideally, it would have gone all the way down to this one because we have the higher high, theoretical higher low, fails to create that higher high, goes aggressively lower, being that the market shift. And as you can see up here, we actually don't have any kind of fair value gap, and down here we actually get that 5-minute fair value gap, which actually looks really lovely. And if we go to the 1 minute, I think I did talk about it on the last video that I published publicly on YouTube. The first entry, which is a lovely entry in my opinion, because as you can see, it does go above both of these highs, being taken as buy side liquidity, aggressively lower, market shift, fair value gap, lovely trade in my opinion. I did take this one back testing it. I did take this loss, but then, as you can see, aggressive move higher, takes move in a better way that same liquidity, that same buy side liquidity, aggressive move lower, market shift, and we have the fair value gap up here or down here. Whichever of the two would have been a nice way to basically finish London session. If I remember correctly, I went for the higher one. You don't have to take my word for this. You don't believe me. I really don't care. I'm just trying to illustrate the 5 steps on this week's market. As you can see, it peaks at, actually it peaks much lower than that, as long as that fair value, as that move higher doesn't actually triggers up for a break even. But based on the current price action that I have, keep in mind that this is replay, it peaks at 10R. I don't go for trades like that. And if I remember correctly, did we have the 50% of the previous day's move, what we were targeting? So 50% is there. And oh, this is the one that actually misses it by a bit. As you can see there, misses it by a few ticks. I don't go for large trades, so I would have closed this as 5 or 4R, right? So I don't think that would have bothered me that much. But thing is, again, run on liquidity, 5-minute market shift, 5-minute fair value gap, 1-minute market shift fair value gap, we take a loss, 1-minute market shift fair value gap, we take a take profit that colors for that loss, and many others that we could have had through the week. Did we get anything through London? I don't think so. This is, oh, this actually after the session. This is the trade that I shared through Telegram, right, publicly. We have a run on liquidity, right? Multiple highs being taken as liquidity. Even this one, oh, actually this one as well, right? Aggressive move lower, theoretical market shift, complicated entry after the session. Do we have the 5 steps? We do. This is not something that I would have taken on a challenge, because in my opinion, this is actually quite a risky trade because it's price action created with news. I don't like using that. The thing is that we do get the 5 steps and could have been definitely an entry to take. Entry that I participated on paper trading. And as you can see, we get even a tiny run on liquidity above this couple of highs, and then we get the market shift below this low because again, higher high, higher low, higher high, higher low, fails to create a higher high, lower low, market shift, fair value gap, right? And that was my execution if I remember correctly. Or this is actually, if I remember correctly, euro dollar is the one that I executed lower, like around this levels, because I missed out on this one because I was actually taking the GBP dollar one. We're not going to talk about GBP dollar today. I'm pretty tired, so I just wanted to make this video quickly. And targeting for this low, I think it misses it. Thing is that we do get 5R before that, so if I would have taken that on a challenge, that would have been close before it. But actually it does reach it without much of an issue. Lovely trade. being that executed up here. Stop loss above the high of the parabolic gap, which is somewhere like that. That's a beautiful 10R, right? I actually do have, oh, well, we can't see the executions on the replay. But I did, yeah, I did share the screenshot of afterwards on Telegram, so you can find that there without me doing much of an effort, as it is already there. Now let's jump onto Thursday, is it? Yeah, Thursday. Thursday there was a London trade that did I take it? Did I participate on it? I don't remember. I did participate on 2 London sessions this week. Or did I backtest it? No, I participated on this one. Yeah, I think I even sent the analysis through Discord. Again, you don't have to believe me. I don't care about that. You don't believe me, that's fine. Just all that I'm showing here and then trying to help you with is the 5 steps. That's exactly what I trade. And that's exactly what allows me to be profitable and consistent. And this is another example of that, right? Stop loss about this high, actually quite a lot. Target was complicated on this one. What did I... Yeah, because we're even below that low. Oh, we have that one. How much does that one give us? That gives us 3 Rs. It kind of allows me to take 30% of the positions there and then go for the 4R. I don't really remember how I managed this one. Oh, I actually took 2 trades on this one because the first one was with this market shift. This, so higher high, higher low. Higher high fails to be created, lower low. So theoretical market shift. This is only something that I would have participated on paper trading alone or demo kind of trading because it's not a really strong low in my opinion to use as a market shift. So ideally I wanted to see this one. Reason why this is what this is the one that I would have liked to participate on a challenge. But being as low as we were, and of course I didn't take this on a challenge. Because I don't trade through London, so I wasn't really interested in risking capital through it. We have a pretty bearish session, and after a move like this, I would have preferred a little bit of a deeper retracement before actually going lower, but we have the 5 steps again. 5-minute run on liquidity, 5-minute market shift, 5-minute fair value gap, and the 1 minute just gives us the market shift and fair value gap. And I think that's it, because that's, yeah, then we have NFP through Friday, just this. It's actually not that. I don't have NFP. What did I... Oh, I ended up avoiding the session because I thought we had news, and then when I realized we didn't, I was like already, I wasn't really that interested in trading. And if I remember correctly, after the market, I analyzed this one, and we actually do get some kind of the 5 steps, a little bit of a variation that I don't really like, which is around liquidity here, the market shift here, the fair value gap right there. As you can see, price takes what, a few hours to actually get back to it. That's 3 hours and 25 minutes. But I do believe we did get the oh, actually we kind of do, but we kind of don't. So we get tiny run on liquidity, market shift. So that means that we can use, based on the way that I trade, we can use this fair value gap and the lower one. And I most certainly, if I would have actually decided to trade this is what I would have gone for, which means that I would have been missed by a few ticks. Oh, and also we had news at 10, which, as you can see, caused a little bit of a aggressive move. But overall, this is not something that I would have participated, mostly due to the news, and also because of this. Price does take a lot of time to actually get back to it. This was somewhat clearly a Judah swing, right? Just going for sales liquidity to continue higher. It's no need to be forcing moves to the downside after such a bullish session. That's pretty much it. A little bit of flow quality in my opinion. My voice is like shit. I was recording an hour video today for the private community that left me very tired. I was intending to actually do not London, Euro dollar and GBP dollar, but I just don't really have the throat for that at the time. So this is it. It's, again, as multiple videos lately, it's just showing you the 5 steps. Right? Showing you what happened through a week or through a specific day with the 5 steps. That's all that I'm doing. I've already, that 3-hour video, in my opinion, is more than good enough for anyone to understand the way that I personally apply how I apply the terms or concepts taught by ICT, the way that I've found some really strong use for, and I'm pretty happy with that. This week on paper trading, I ended up on 50%, 15%, a little bit less than 50% because I took losses through Friday's London or pre-New York, if I remember correctly. And I was not trading through challenge this week due to the time zone change, right? New York went from UTC -4 to UTC -5, which could alter the market, so I prefer to avoid it this week. And to be fair, I missed out on the losses on Monday, but I do believe that I could have taken some good profits through the week, which would have been lovely to be on the challenge. So yeah, it is what it is. That's pretty much it. One more time, this is just showing you what I've already taught through that 3-hour video approximately. And if you want to learn, it's there. Yeah. On the other hand, I'm teaching through the private community, but that's just a whole different thing. Yeah. Hope you enjoyed this video. Hope you had a very nice week, and I'll be talking to you on the next one.